Hey guys, and welcome back to the FX Academy. If you're here to find out about the latest analysis and forecasts about the gold USD spot market, you're in the right place. Stay tuned, it's coming. But before we do that, please consider subscribing to the channel, smash the like button and leave a comment in the video below. Thank you. And welcome back, guys. Today is a wonderful day. We have the European Championship finals and England is playing against Italy. Who will win? I have no idea, but being a really fair and impartial man, I would like to say congratulations for Italy for being the second best in Europe, which is something that you should be really proud of. But enough of the football now, let's focus on the gold analysis, because I have something interesting for you guys. Now, this chart which you see on the screen should be familiar for you, because we analyzed gold exactly 2 weeks ago. So if you see on the screen, this was the video from 26th of June. So actually I haven't done a video for 2 weeks, which I do apologize, but I was busy with live. So you can see that in the previous video 2 weeks ago, I forecasted that this wedge is going to be broken out to the downside, and around the 1750 area the price will find support, and after that it will create a bullish market structure, creating a bullish trend line, higher highs and high lows. So let's go back to our chart, and you can see I tried to recreate the same chart I drew 2 weeks ago, so there could be a little differences, but you get the idea. So let's see with the backtesting what happened after I posted the video. So you can see that the price did broke out to the downside, exactly found support at the 1750 level, and then created a market structure by creating high highs and high lows. And if you fast forward a little bit more, you can see that the price since that didn't stop, and actually it was something that I wasn't expecting, because the price was really bullish. So a little bit more on. Okay, so this is what we have currently now. The price is sitting at 1808, so just above the 1800 area. And last week I forecasted to my team that the price is actually going to drop from this level around the 1800 level, 1805, going back to retest this trend line, but it didn't happen, and the price is actually pushed up because we had some commentary from FOMC, which actually the minutes came out, but the minutes were really hawkish. So the price did continue to the upside, but you can see that this area wasn't the area I wanted to trade in, and most of my analysis failed in this area. So this is something you should admit. If you make analysis, there is no wrong analysis, there is just learning. And if you lost money in this area because the price was indecisive and it was a difficult area to trade, there's nothing to be ashamed of, because I know many professional and good traders who actually had no idea what's going to happen with gold. And you can see that gold went up and then came down, and people started to short it, putting the stop loss just above the 1810 area, and then they got stopped out, and then they started to short, and then the price came back up again. So it was a little bit choppy. But what's really important, guys, even if you lost money, you should be always managing your risk, because in trading, the only thing that you can control, or he or she, a trader, can control, is you cannot control the market, but the only thing you can control is your risk, your position size. And if you don't know how to calculate the position, go to myfxbook.com or just find a position size calculator, and do not risk anything more than 2 to 3% on each position. And by sticking to this rule, you should be fine. And even if you have a losing week, that shouldn't affect your overall profitability in the long term, because remember, forex trading, gold trading, stocks trading, any kind of trading is a marathon, not a sprint. So we arrived to the forecast of the gold USD spot market. Now you can see that last week was a little bit choppy, price went up and down, which was difficult to trade. And people asking me, which direction is gold going to go? Well, I can tell you it's going to go up or down. But not being funny, let's see what we have on the higher time frame. So if you use the Fibonacci from swing high to swing low, the first thing we can see that we just arrived to an interesting level at 1825. The next one is the 61.80. So these are the key resistance levels. So even if the price respects this trend line, the first resistance level will be 1825, and the second one will be 1843, and then the third one obviously 1868, but that is a long shot. Well, actually with gold, who knows, but definitely keep an eye on these areas. Now if you go down to a lower time frame, what I want to see is some kind of retracement to the bullish trend line. So if you use the Fibonacci again from swing low to swing high, what do you see on the chart? The first thing we see, if you just, well, you can't really adjust this trend line, but the first thing we see is we definitely have a rejection level at the 38.2%, because this is a well-known rejection level. So what I would expect next week from gold is actually to break this bullish trend line, because so many people went long and so many people went short. I would expect some kind of break of market structure and break of this shitty choppy movement. So because we had this sideways movements, it's difficult to make a really clear analysis. And something that we did like 2 weeks ago, where I forecasted that the price is going to break up from outside upwards from this triangle and then all the way back down, creating a bullish market structure, which was a nice analysis. But since we have these sideways movements, these choppy movements, it's difficult to trade, difficult to make an analysis. So what I would expect is definitely the price to come back down and retest the 61.80 level and then all the way back up to 1836. Now, what kind of technicals point to this direction is definitely difficult to say, but I would expect some kind of bigger correction. And bigger correction, I mean something in the range of $40 to $50, all the way from 1808 down to 1777, and then all the way back up. Now, we talked about the fundamentals a few weeks ago, and Basel III regulations just kicked in. And if you don't know what's Basel III, check one of my oldest videos where I talk about the fundamentals in gold analysis. So Basel III regulation basically enables or allows the central banks to revalue their physical gold holdings if it's allocated. So instead of the 50% haircut calculations, now they can count it in their books with 100% or its face value. So which means if central banks holding gold, or if they buying gold, they will be able or allowed to hold gold at its full price, because previously gold was considered as a really risky asset, difficult to move around because it's physical, you have to secure it, you have to sell it on auctions, etc, etc, etc. So the BIS, or the Banking International Settlements, actually said that no, you cannot calculate gold at its 100% value. The only thing you can do is cut it in half or apply a haircut, which means central banks who held gold, they can only calculate it at 50% of its value. Now this is going to be changing, or it's already changed, because the central banks will be allowed to hold gold at 100% value. So again, there are many fundamentals pointing into the direction of a bullish movement to the upside. So what I would expect, just to keep it nice and short, is price to break this trend line, come back to retest the 1777 area, and then go back to 1833. So as you can see, until we don't have this break of this sideways movement, this shitty little choppy market, I don't want to go any further into the analysis. I don't want to forecast go mega bull or mega bear. I don't want to say it's going to reach 3000 this year or going to the moon like many of the morons do online. Keep it simple, keep it short, and just keep it short term, definitely, because we don't know what's going to happen with interest rate. We have no idea what's going to Jay Powell and the Fed will come up this month, but until then, your best chance is to scalp your way and just do short-term analysis. And anything longer term, it's a bit silly to make, because even the Fed doesn't know what's going to happen with the economy. So saying that, this was the analysis for this week and the forecast. If you get out any value of the videos, guys, please make sure you consider subscribing to the channel, smashing the like button, and leaving a comment below. Thank you, and good luck, England.